Hi traders, welcome to this week ahead analysis video with me, John, Senior Market Analyst here at Blueberry Markets. Let's dive straight in then. We're going to take a look at that all-important data coming up this week and some charts of interest. So in Europe, we have quite a bit of data this week. We have the flash manufacturing PMI and services PMI out of Germany and France. Obviously, Germany we're going to look at very closely, especially towards manufacturing PMIs, as previously it actually dropped down towards 41.9. We're actually expecting a little bit of an increase this time, so that could be a little bit of a positive for German manufacturing. Still below that 50 though. That 50 level usually shows growth, and below 50 usually shows contraction. So we would like to see, or Germany would especially like to see this above 50. Would the ECB like to see this above 50? Probably not, because if they start to cut rates, then it should actually support the German economy a little bit there. We've also got UK manufacturing PMI and services PMI as well. In the UK, we are service based, so services PMI is going to be pretty important there. Expecting a little bit of a decline from 53.1 to 53, but that is pretty similar to the previous. We've got some CPI data out of Australia this week. CPI quarter on quarter expected to climb from 0.6% to 0.8%, and CPI year on year remaining the same, around about 3.4%. Going on to the US data this week, we've actually got very little US data apart from manufacturing PMI, services PMI, some unemployment claims and advanced GDP quarter on quarter. But we do have core PCE price index at the month on month that is expected to remain the same at 0.3%. One of the big talking points this week is probably going to be the Japanese yen. We can see the Bank of Japan policy rate here expected to hold at 0.1%, and it'd be interesting to see how they see this after the recent sort of inflation data that we've had out of Japan. Going on to the currency strength meter, then I've just added a little bit here just to give you a little bit more context around what I'm looking for. Really, dollar's still the dominant currency here, and it's in that reversal zone, so it's in a very awkward place at the moment, but it's still looking at it on the long side of things. Swiss franc has gained strength, which would be sort of not what the Swiss National Bank are particularly looking for at the moment. They want to see a weaker Swiss franc, so I think they might have to come in with a potential other cut, and that could be something to look for in the future. But at the moment, Swiss franc gaining some short-term strength. The yen, weaker currency at the moment. Would I bet against that weakness at the minute? Probably not, especially because what we're seeing globally as well, and the pound continues its decline from the previous reversal zone that it was in. Going on to the US dollar index then, I really like the dollar index at the moment, and obviously we've had a bit of a sort of pullback week, and that was to be expected after a large explosive week. Typically you can get a week where we kind of pull back a little bit. We are still technically bullish here. If I look at the daily time frame on the bottom left, we're making higher highs and higher lows. If I look at the 4 hour here on the right hand side, we're just trading within a range between 105.79 and 106.38. So I'm still favouring the upside here. So really speaking, if price comes down towards the lows here, I want to be looking to potentially be a buyer of the US dollar in that case, even if it comes down to 105.50. If we hold below this level for too long, then it could increase the probability of a pullback, a deeper retracement, perhaps towards the 105s. But I don't really see that happening just yet. I still feel that there's a good potential for price to continue to push into the 2023 highs, so I'm still looking for that potential going into this week. So if we do see an early drop in sort of the early part of the week, then 105.80 could be important. Going on to euro dollar then, so very similar setup here. We're breaching down through key areas of structure. Last week we had a bit of a stalling from the previous bearish candle. 4 hour in this consolidation. Again, looking at these kind of areas here, does it find resistance to trade back to H4 lows? Do then we stay within the range, or do we breach the range there? Cable will be an interesting one. Cable starting to actually make a little bit more downside. I actually favoured a little bit of upside to cable if and only if we breached 125, and we haven't done that. Price has stayed below 125, so obviously sellers are definitely in control here. We usually actually see quite a very strong seasonal period for the pound at this time of year, but that's not to be the case this time. By the looks of things, we're kind of breaking lower, so unless we breach back within the range, I won't necessarily be bullish pound at the moment. Strength meter also suggesting that it's a bearish currency, so if we can hold below these kind of recently formed 4-hour lows and below 124, I think that it could invite a bit more selling pressure on the pound. And then finally, I thought I'd include the Dow Jones, because we haven't actually talked about stocks in a very long time, but obviously the talk of rate cuts being pushed back by the Fed is going to affect the stock markets, and we actually saw quite a little bit of volatility coming in last week. The VIX was up quite aggressively, and that's also fueled this downside in the stock market. And what I really liked was this 4-hour chart. Look how lovely that 4-hour chart looks in terms of trend. You know, if you were a trend-based trader, you know, this would have been something really to look at going into the past few weeks, the past couple of weeks, because as soon as we breach that 50 MA to the downside on the 4-hour time frame, the market created this really nice lower highs, lower lows. But we're now in a really important area. If you look at the weekly chart there, there was a nice little sort of consolidation that the market's testing at the moment. Daily congestion there, showing that same sort of detailed look that we saw here. And I'm watching the 4-hour now. If we breach the 50 MA to the upside, we breach these swing highs, it could lead to a potential bullish move back into those key swing highs. So this could be a really good risk reward trade potential on the Dow Jones. So hopefully you enjoyed that video. If you did, leave it a thumbs up, subscribe if you are new, and I'll catch you in the next video.